Banks are predicting 6 interest rate rises, with 3 of them before Christmas. Let's have a look. Hello everyone, Florian Heiser here, and welcome to another episode of Heiser Says. I hope you're all having a great day. I've got my morning stein of coffee, and I thought we'd have a look at an article originally from the Courier Mail, now pushed on realestate.com.au, discussing, well, the big 4 banks predicting interest rate rises. Now, for those of you playing at home, the cash rate at the moment is sitting at 0.1%. And yes, I haven't bothered updating this chart in some time. I'm seeing how long I can get away with it, because it's been flat for some time, everyone. But we have been discussing in several previous videos simply interest rates creeping up, particularly in the fixed rates. That's because a lot of the banks are financing offshore, and that influences the cost that they have to pay to get access to the money. It's all a bit frustrating when you look at it, how interconnected everything is. But in the end, all we need to realize is that we've got to pay. It's going to have an impact on, I'd say, the discretionary spending of the average Aussie. If more of your money is going towards your mortgage, you may be a little bit stressed. You may need to tighten the belt. The luxuries may start to disappear, and that will start to be felt in the retail sector. I'm on a carnivore group on Facebook, and in this group, people are already complaining about how expensive meat is getting right now. I went out to buy some steak the other day. In the past, we would buy half a beast at a time, and we can't do it at the moment because we're all of us in a little tiny rental. We don't have room for the deep freeze. And to be brutally honest, I don't want to get it down the stairs and carry it up the street just to carry it back. 6 months' time, it's staying where it is. So we've been just doing small shops, like normal people shops, big 1-month grocery shops, but the meat's just been part of that, not separate. And we're starting to notice the cost increases. Now, interest rates going up on people's mortgages means that their repayments will go higher. And we've looked at that several times. We'll look at it again today. That's going to impact the amount of discretionary spending they can do. How much you're going to have to spend on other things. I don't know if we'll see a flood of houses hit the market as repossessed mortgagee sales fall over. While I know some people are hoping for that, they're waiting. And I'd say that's a bit of jealousy, a bit of the tall poppy syndrome, and a bit of just wanting to see people who've really leveraged themselves way too much get their comeuppance. We've seen now that the government is more than willing to intervene in the market to keep everything going. You've seen the banking regulators changing the rules. Here's the thing, we're not in a free market. They changed the rules to suit the situation. And you know what, let's remind ourselves of that. Hang on, I will bring this up. We'll go through some of the things where the government was coming to the rescue. I mean, this is just how they're juicing the market. The cash rate insanely low. 3% used to be considered an emergency cash rate, guys. You got home builder grants, 88 grand used to be a lot. Now we're looking at 200. 200, where the state comes in and owns 40% of your house. How is that normal? How have we gotten to a point where that is the solution to the housing problem? The government taxes the shit out of you, forces you to lock your money away until you retire. That 10%, boomers didn't have that. And then uses that money that they tax out of you to buy a part of your house. Awesome. Just wait, they'll bring in a death tax next. So 40% of your house is owned by the state. Then when you die, they take that and they take half of what's left over for your kids. Isn't that awesome? You got 5 and 2% government loans. I remember when I was worried about those. Let's just hope they cap it at the 10,000 and it doesn't go stupid like America. Let's really hope. You got negative gearing, which is a cultural phenomenon here in Australia. Labor tried to get rid of it. But the problem was they only were getting rid of it for everyone new, not for all the oldies. They still got to keep it. Then you had the super withdrawals. But also we had things like, trading while insolvent. This is the one that really got me worried. Because I'm a small business person. I've dealt with other people. I've had to chase businesses for money. That's the most frustrating thing. And I think a lot of other small business people can attest to that you have to you become hardened, let's say. You become hardened. So, they're just some of the examples that I wanted to share with you. So let's have a look at this article now about the interest rates 3 times by Christmas, everyone. That could be a Christmas present to all of us. Now, the people who are struggling financially or who are a bit close to the bone, they're going to have to cut back. And where do you cut back? If you're sensible, you cut back on discretionary spending. It'll be all the monthly subscriptions first. It'll be that gym membership you don't use. It'll be that subscription to EA games or to Netflix. You'll just be chipping away at it. So, one of Australia's biggest banks expects the Reserve Bank to hike interest rates 3 times in quick succession, taking the cash rate to pre-pandemic levels by Christmas as the economy picks up. The National Bank of Australia also warned it saw a further 6 interest rate hikes coming off the RBA in the 2 years after 2022, reaching a 2.25% cash rate target by the end of 2024. Okay, wait, so 3 now and then another 6 after that. NAB changed its outlook on interest rates as the economy continues to outperform our expectations, with strong domestic forecasts, including unemployment falling below 4% this month and 3.5% in the second half of the year. We now see the first RBA rate rise occurring in August, 15 basis points, further increases in September of 25 and November of 25, the NAB economics report said. This will see the cash rate back to pre-pandemic levels of 0.75% by the end of 2022. And it said, as RBA bond holdings matured, we will see a further 6 hikes over 2 years, which will see the cash rate around 2.25% by the end of 2024. The outlook was in contrast to the Commonwealth Bank's Economic Insights team, which was more conservative, expecting a shallow tightening cycle ahead. We expect the RBA's tightening cycle to commence in June. The CBA Global Economic and Markets Research paper said, we expect the RBA to lift the cash rate to 1.25% by Q1 2023 and hold it there for the rest of our forecast horizon, which extends to the end of 2023. NAB said, while Omicron hit hard in January, the impact on consumption and the labour market was short-lived, with the economy now overperforming. NAB believed core inflation would go to 3.75% by mid-year, compared to the RBA's 3.25% forecast. We expect the RBA will continue to gradually normalise policy through 2023 and 24, assessing financial conditions in real time as the TFF, Term Funding Facility for Authorised Deposit-Taking Institutions, ends and RBA bond holdings begin to mature. The report said the RBA is unlikely to reinvest its bond holdings as they mature, instead allowing maturities to roll off the balance sheet in 2022 and subsequent years, subject to economic conditions remaining favourable. The report comes as NAB announced that over 1,000 customers and colleagues had been given $1,000 emergency grants in the wake of the flood devastation across Queensland and New South Wales, worth more than $1.2 million. Okay, so let's have a look at a few numbers here. What we have here is the current CommBank home loan interest rates. So we've had a look at all the fixed rates. So you've got, what's this? Principal and interest. That's what we're interested in. No pun intended. And you're going from 2.94% up at 1 year fixed to 4.14. And these have been going up. I fixed at 1.99. And when I come off that, I'm going to, take a bit of a jump. And a lot of us will. Because here's the shocker. None of us trusted good old Philip Lowe. Can you blame us? So, here's one I want to look at. The standard variable rate is 4.55%. So let's play with some numbers over here. And that's now. So this is my little Excel based on 30 years of monthly repayments, and that's to pay it off over 30 years at this interest rate. So let's say right now we're at 4.55%. 580 grand is the average mortgage. Okay, 580. 4.55, you're paying $2,956. Now, this is variable. Let's say they increase by, what were we saying in the articles here? Say pretty much a 2.25%. Let's assume it aligns up exactly with the RBA rate. So we'll do this one equal to that plus 2.25%. So the variable rate divided by 100 is now at 6.8%. What we're seeing, an increase of $825 a month. That's nearly a 30% increase, or 27.91% increase on your mortgage repayments. If you have a 580 grand loan, 30 years, you're paying interest and principal right from the get-go, from now until then. So a 30% increase in the repayment burden, how is that going to play out in the market? So we're talking serious money here. Now, $825 a month, getting close to $1,000, a 30% increase in your mortgage repayments. How many people are going to be pushed over the edge for that? How many people are going to get into trouble? Now, with an election coming up, what interventions and what steps will the government do to save people from this situation? How many people can afford a 30% increase in your repayments? Now, this isn't all going to hit at once. It will be stretched out over time. So there are steps people can take. And let's have a bit of a talk. So I really should be, playing this up, getting all the fire, brimstone, and explosions in the thumbnail. It's 30% increase in mortgage repayments. Housing's going to crash. Everyone's going to collapse. The end is nigh. I really should, shouldn't I? But here's the problem. I'm too stoic, everyone. What comes will come. No one should be shocked that interest rates are going up. People should be prepared. Now, there are many that won't. And they're going to have to learn the hard way. I think what we're going to see, you're going to see a whole lot of people that suddenly realize that their budgeting is bullshit. They've never had to do it, and they have to step up and learn. And that means maybe selling that extra car, getting rid of that debt, buckling down. Most people are going to do whatever they can to fight to keep their homes. They'll do whatever they can. And we saw the banks change the rules. We saw the government change the rules. So homeowners are a big political group in Australia. It's our whole culture. Will we see a flood of them hit the market? Maybe we'll start to see a cooling in residential property. I mean, here's my mother bought a little place down the Gold Coast, a downsizing little 2-bedroom in a complex, little brick veneer attached townhouse, 1 story. Perfect to age in place. Great for the grandkids to visit, a pool that she doesn't need to maintain. The gardening's even done. She got it a few years ago, about $250. Perfect little downsizer. That's what you want. Same when we redid the flooring, painted it. Not much we put into it. Another one in the same complex now, asking over $380. It's insane. It's just going crazy. We're really starting to see some serious numbers here. The next few years, a lot of people are going to be impacted very hard by this. They're going to have a taste of reality. Some of them that have been leveraged too hard, well, some people may be forced or pressured to put onto the market. But so long as you can keep the payments coming and keep up with the bank, they're going to do whatever they can to keep it all moving. They want to keep the merry-go-round going. I don't think we're going to see a calamitous correction in property. I think we'll see a cooling in Sydney and Melbourne, and then calls from the Property Council and other organisations to bring more people in because we've got a skill shortage. What do you reckon? Am I just getting too cynical? Do you think this is going to have a huge impact on property? Let me know in the comments down below. Thank you all for watching. Like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can help us. You can join us on YouTube or Patreon, sign up for Self Wealth or Stake, or use our affiliate links at Amazon, eBay, Independent Reserve, or Aussie Broadband. It all helps the channel, helps us create the content. Take care, guys. I will point to a few other videos of interest rates increasing. The fixed ones are going up. 30%, guys. It's going to be a doozy. Take care. I'll see you next time. Bye for now.